So when no one tells you about becoming a profitable trader is that trading is a business, okay? Yes, it's a skill set, but trading itself is a business and you have to run it like a business. In this video, I will go over how to run a successful trading business, okay? Phase one, what's your trading style? Huh? Are you a scalper, intraday trader? Are you a swing trader? Are you a positions trader? So scalpers are usually people who are in and out of the market real quick, catching moves that last maybe minutes. Intraday traders are traders who catch moves that last hours, maybe multiple hours, all right? And swing traders hold trades over a period of days, sometimes even weeks. Which of these trading styles fits your personality? That's the first thing you have to know, right? So technical analysis. How do you determine which way the market is going? What is a trading setup based on your system? And how do you define market conditions based off your system? Now, this could be technical analysis such as support and resistance. You can use channels, you can use structure, supply and demand, trend line breaks, whatever you do in your system, you need to put that down and understand this is my system, okay? This system needs to be in a step-by-step mechanism, meaning it should be first, I do this. Secondly, I do this. Thirdly, I do this. All right. This is how you have a business, something that you replicate over time to get a answer for whatever environment you're in. So when I say technical analysis, I just mean, hey, say you come to the chart and you identify, hey, this is structure for me. Right here, the higher low was broken on the 15-minute. Now I want to draw a Fibonacci. Okay, cool. And then you say, oh, this is a key area here that I like, and you wanted to trade that. Like in hindsight, right? Just giving you something very simple. And you just sold here and you targeted this 27 level, right? And you put your stop just above the zone, right? And you can go on for about a 2.5 or 2.75. Let's just say that's your strategy. That is your technical analysis. You use market structure, you use a little bit of supply and demand level here, which is this is supply level, which means sell. We use candlesticks, understanding how to use candlesticks, and let's just say you even use trend lines. That is not something I use. You say trend line broke, you expected it to retest and come back. All right, you use Fibonacci as well. All these things are in your toolbox as a trader that you are using to perform technical analysis. All right. So after we understand what we use, we do that in a step-by-step approach. We want to understand something that's very powerful that I think most people miss out on. Your risk reward system. How much are you risking to get a certain amount of reward? So what do I mean? Risk is the calculation of a potential loss. Let's say you're risking $100 per trade. The gain is how much is your potential gain. So with a one-to-one system, this means that one loss equals one win. All right. If you're trading this way, you need a 60% win rate to be profitable. Now, if you're trading with a 2-to-1 system, meaning 2 losses equals 1 win, at that 40% win rate, you are a profitable trader. But what people don't understand is that you have to take a series of trades. It's not like, oh, I took 3 trades, my win rate ain't right. You have to take trades over a series of trades, 30, 40, 50, 100, 200 trades, so you can understand what your edge is and then give your edge the time to play out, right? So now we got a 3-to-1 trader, meaning that 3 losses equals to 1 win. And with a 30% win rate, you will be profitable, all right? So we're looking at risk management, talking about how much are you risking per trade. So with a $5,000 account, and it's another thing you have to combine, right? With a $5,000 account, if you risk 1%, that's $50 per trade, okay? With a 2% risk, that's $100 per trade, and so on and so forth. With a $10,000 account, you have a $100 risk for 1%, and then you have a 2% risk of 200, and so on and so forth. As you can see, the bigger the account, the higher the risk, which means the higher the reward in dollar value, right? Typically, how much do you want to risk per trade? I would say 1 or 3% is all you should be risking if you want to build a profitable business. You don't have to go all out and risk 10, 20% of your account because losses and loss streaks do occur, and we want to stay in business, okay? Losses are marketing dollars for your business. They are expenses for the business. Your winning trades are the profit and the revenue for your business, all right? You get revenue from winning trades. Your losses give you your losses or your business expenses, and then the bottom line is what's left after that. When you taking your trades, do you roll your stops to break even? Do you roll them after 1-to-1 is achieved, after 2-to-1 is achieved, After 3 to 1 is achieved, do you roll it at a certain number? You have to understand how you're going to manage your trades. Am I saying you have to have a break-even rule? No, but it's very smart, and I have it in my trading system to protect my profit. When you take a buy trade and you're targeting 50 pips at 25 pips, do you partial out 50% of your position size? Do you partial out 10%, 5%? Are you taking partials out and paying yourself when the market is going in your favor? Are you rolling the stops and protecting yourself when the market goes in your favor as well? Those are things you want to consider in your trading system. All right. Now, this is something that I believe is very important, but now that we understand win rate, you need to understand not only what market are you trading, such as the Euro USD, GBP USD, gold, NASDAQ, US 30, and so on and so forth. Once you understand your win rate, and you can find this through back testing the data, let's say you back test 2 months and find that you get 100 trades, and out of them 100 trades, you got a 50% win rate, right? Or 60% or 70% win rate. You want to look at each day and see how many setups you actually seen that met the criteria of your trading system, of your technical analysis, right? Right? You got analysis, then you got a setup, then you got entry. That's how your technical analysis should go. Analysis on the market using your tools such as trend lines, support resistance, supply demand, whatever you use, liquidity. Then you have a setup, which means when the market gets to this price, I'm waiting for something to happen, which is my signal, before I enter the trade. And then I put over here, I go to my risk reward and my risk management. All right. So you should know everything about your trading system. You should know how many setups you see daily. If you see 2 setups daily, you know that your trading system is going to give you 10 setups a week. You know your setups is going to be 40 monthly setups if you have that 2 daily setup system. So do you understand what I'm saying? We trade Monday through Friday, unless you trade gold, because gold on Sundays does give good setups in the Asian session. So we're looking at 2 daily setups. That's 10 a week, 40 a month. Follow me? Let's just say 3 daily setups. That's 15 a week, 60 trades a month. You see 4 daily setups. That's 20 a week, 80 a month. Now, some people are going to say, man, it's impossible to see, 80 trades in a month, 20 trades in a week or whatever, but everyone trades different. Scalpers see a lot of trades, and I have a scalper's nature. You wouldn't believe how many trades I see in a day, but I'm going to see at least 4 to 5 setups that are quality setups, all right? But that's characteristic of my system, of something I've built and I developed, right? So let's just say you're trading a 2R system, right? This is when you have 1 win equals 2 losses, right? Or 2 losses equals 1 win. You're trading a 2R system. Let's just say an example, you have a 50% win rate, you see 3 setups daily, and you have 60 trades monthly, right? Based off the number. Now, 50% of 60 is 30. So you got 30 wins and 30 losses, right? 30 wins, they will be factored and multiplied by 2R, right? Because each win in a 2R system is worth 2R. You got plus 2. You have 30 losses that are minus 1R. So your wins are higher than your losses, all right? Let's break this down. So you have 60R minus 30R, because you got 30 losses times 1, negative 30, 30 wins times 2, which is plus 60, right? That gives us a positive 30R. So for the month, you're up 30R, which is great numbers, especially as the capital grows. Now, let's just say you have an account size of $5,000 with a 3% risk, which means you're risking 150 per trade, $150. Let's look up here. You see 5K, 3% risk, $150 per trade. So every R is worth 150, win or lose. However, remember, when you win a trade, that is 2R. So 150 plus 150 is $300. And when you lose a trade, you're going to be minus 150. But every gain or loss based on the R is going to start with that 150, because we're risking 3% per trade. Let's just say you got 30 wins, 30 W's equals 60R, right? We know this is a 2R system. So 150 times 60, $150 times 60 makes us 9,000. So our business this month made $9,000 in revenue. However, we had 30 losses as well. And these losses, remember, they occur in a sequence of events. These wins and losses. This is over 60 trades. You might get win, 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 loss, loss, win, loss, 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 win, win. We don't know. All right. It's a sequence of events. So now we got the 30 losses. 30L equal negative 30. So you got negative $150, because every loss is going to be a minus on your account times 30. That gives you a negative $4,500. So on a month, which is going to be your expenses, we got revenue here, we got expenses. $9,000 minus $4,500 gives you $4,500 profit, risking 3% of your account, trading a 2-hour system, right? This is an example of how you understand your trading business, how you run your trading business. The big part is understanding that you actually have to experience 60 trades, right? And I'm gonna do a part 2 of this to show you how this could potentially work out. But you got to experience this sequence of events in the market environment of 60 trades that can be in any order possible. It could be a win, loss, win, loss, win, loss. Like you have to experience that, right? And keep track of the data in your system so you can understand, okay, I'm here, I'm at 10 trades, 20 trades, and keep the data. Then you will begin to understand that trading is just simply about executing your system. So let's just say you tested 2, 3, 4, 5 months, 6 months of data, hundreds of trades. Then we know this is the baseline of your system. You have to just trade your system until your edge plays out. And these numbers, this 50% risk, this 50% win rate, this, plus 30R for the month, $4,500 profit on this account. You will only receive and achieve this with flawless execution on your system, right? Meaning you're marking up your charts using your what? Your technical analysis. You're entering your trades based off your technical analysis. Whatever your rules are, your trading plan is 3-4 step trading approach. You're executing it flawlessly, whether you won or lost on your last trade. All right. Now, I hope this shares some insight on how to run a trading business. This is phase 1. Phase 2 video will be pumping out very soon.